Now more than ever, I think it's important to have a part of your portfolio which is allocated in Asia and potentially even in China. I started investing in China in summer 2024. Some of my position now are up 40%, and I will explain you in this video why I decided to allocate a part of my portfolio to Chinese company and to Asian stock markets. The first reason that pushed me to start investing there is a cycle. Okay, I've been reading a lot of books about market cycles, especially reading a lot of Howard Marks memo and books, and we had a pattern in China that was literally like what is written in the book. Okay, you cannot do differently. It's like the perfect example. We had a big real estate crisis. Okay, right after the pandemic, a big real estate crisis. So a lot of trust lost in Chinese real estate market. You have a high unemployment rate for young people. You have a slower growth rate as well. They were expecting 8% growth rate per year. They had only 5%, which is still great, but less growth rate. You had a non-friendly government toward investors, but with an ambition to be the first country in the world. But they are not really friendly with investors. They are not really friendly with the companies that they can be nationalized. Like, it's not really a safe haven for capitalists. Okay, you have a lot of strange things happening with billionaires and so on. A lot of people were scared to invest in the country. Like if you open YouTube last year in 2024, before that the Chinese market went up, nobody was talking about China. And if somebody dared to ask in a comment or something about China, you will never have anybody talking positively about it. Everybody will say, I don't risk to invest there. The country is absolutely not friendly for shareholders. The country is too difficult. There is too big uncertainty. It's too dangerous. I'm not putting my money here. And it's kind of understandable because China has been through a long time of decrease. Okay, since 2020, the last high was this 2020. We're in 2025, and since 2020, we lost 64%, and it was flat from 2022 till 2025. It's been 3 years that it's flat. It's going up 10%, going down 10%, up 10%, down 10%. So yeah, it's normal that people were scared about, but we were really in an area of extreme fear about China, about investing in China with low performance on the stocks since 2020. Okay, the last thing that was important in this cycle was a bad press. Okay, China really had a bad press, especially in Europe. I don't know exactly how it was in the United States, but I think it should probably be kind of same as what we had in Europe. Okay, and the problem with this bad press is, on one hand, you have the media, you have everybody telling you that China is bad. People are treated bad in China. Chinese people don't live correctly. All of this. Chinese are poor. While on the other hand, everybody that I've talked to, which went to China, every good investor, great investors, a big entrepreneur and so on that went to China, they all have only good things to say about China. So maybe they can be a bit biased and so on, but yet the difference in the way, the speech that they will have from people going to China and media which probably never went to China or just want to do a Uyghur repertory or something like this, they had two different versions of China, two different speech about China. And on one hand, people who went there, only good comment, on the other hand, bad press. So this kind of indicate me first that we are potentially at the end of a cycle. Okay, that was maybe not the bottom, but we are close to the bottom of a big downward cycle, and that it will potentially start to go up from now. Now, we never know when it will start going up. Okay, when I invested in summer 2024, I have no idea when it will go up. I didn't know if it will take 1 year, 2 years, 3 years, 5 years. I didn't know. I just was confident that yes, the situation was bad, but we arrived to a point where the risk reward was so good. We arrived to a point in a cycle where, okay, at this point, can we go deeper? And most of indicators will say, yeah, it's difficult to go deeper. Seeing the situation, it's difficult to go more down. So the risk reward started to be really interesting. The second point, if you have great companies in China, you really do have great companies with high undervaluation and companies that had already had more trust from investors. You take, for example, Baba. It went to some high valuation. A company like Baba, a company like JD.com, a company like, you can say, Tencent. Tencent, it will be same. It's company that already had once a great trust from investors. It's not companies that never skyrocket, that were never had, that always had low valuation. No, it's not a market where company always had low valuation. There was a time where investor trusted China. Now it disappeared, but the company continued to improve. The company continued to have higher profit, gain some market share. Plus, they have actually very low debt. Most of the company, I mean, at least the companies that I was looking for, had low debt. Most of the time, more cash than debt. They had good growth, good return on invested capital, good margins. So a lot of good things, okay, plus a growing economy and a growing sector in which the company will be, which is growing. So that start to be a lot of points where you can imagine that, yeah, you can have a rebound. You can have a rebound, especially at this type of valuation, okay? The third point is an investor with track record. You had some serious investors that started positions, and even more than position, doing big bets on China. You really had, like in 2024, more investors starting investing more and more in China. Okay, for example, you type in Dataroma PDD, which is Pinduoduo. It's 9% of Michael Burry's portfolio right now. Robert Vinal, it's almost 9% of his portfolio. David Tepper, 8% of his portfolio. Norbert Liu, 4%. Like those four, I mean, except maybe Michael Burry, which is more of a trader, which changed a lot, but you have some serious name having a big allocation of this company. Like when you have 8%, 9% of your portfolio in one company, is because you believe in this company. If you go to another one, we can go Alibaba Group Holding, okay, Baba. Michael Burry, 16% of his portfolio. David Tepper, 15.5% of his portfolio. It's in Baba. You have Samantha Michaelmore, 2.7%. Guy Spire, 2.14%. Okay, David Tepper had an amazing track record. It's been outperforming the market for years. He had a good track record. So again, 15% in Baba for him, 9%, 8% in Pinduoduo. It's already a big percentage of his portfolio. JD.com, same. Michael Burry again. David Tepper, 5, almost 6% of his portfolio. Howard Marks, 1% of his portfolio. So you really had some serious name buying in China, buying companies in China and buying serious companies in China. Like they didn't do just, 1% just to see. No, we are talking about 8, 10, 15% of a portfolio in some Chinese company. So that's the third point. The fourth point that made me want to invest in China and to have a part of my portfolio here is this new world order, okay? Ray Dalio is talking a lot about this. In 2024, when you consider that United States equity, okay, US equity, had a high valuation and globally worldwide, the worldwide money was concentrated in the US, it would be kind of easy that at some point of the cycle, some money will get out of this market to potentially go in the Chinese market, okay? I want to be invested in other countries in the world. Like if tomorrow we have a separation in the world, the rights on the western side and the eastern side, okay? You have China, BRICS and so on one hand, US, Europe, whatever on the other hand. Like why not being invested in both? Why having to pick one side or the other? So don't get me wrong, I still have most of my portfolio in US equities, okay? I just want to have as well a position in China. For now, it's around 10% of my portfolio, could grow to 15, 20% of my portfolio, because I want to be exposed if tomorrow, okay, for the next decade, for the next 20 years, the next cycle is Chinese. If the next cycle is Chinese, if the next cycle we see most of the innovation, most of the biggest company, most of the great company from China, I want to be part of it. Maybe it will not happen. And if it doesn't happen, it will only affect 10% to my portfolio and eventually 15 to 20 if I continue adding more in China. So that's the reason why I invested there. In China, the companies that I wanted to find and in which I invested, they are not selling in the US. They don't depend on the US, okay? So when I say they don't depend, it's like from a customer point of view. They don't sell in the US and so on. But of course, you always depend a bit from the US because you have NVIDIA producing great chips, you have Broadcom and so on that can produce great chips, even if now you have Huawei that start to be very serious, but you always need some US things, okay? This is something where Americans have been very good at, is to put worldwide things that they can produce. But at least I was trying to have companies in China that will be mostly exposed to Asian market and to have the least exposure possible to the US. So this is how I did. I think it's some great, I'm not saying lesson from here because maybe in few years my investment in China will go to nothing, will do nothing, and it will be a waste of money. We don't know. I cannot predict the future. But I think considering those things, that if you take those patterns, okay, into consideration for your portfolio, you can find some great opportunities in some area. Now, I'm only invested since a year in China. The performance had been great for this first year, especially when we see the performance in the United States during the same year, but it's not the end, okay? I invest for the long run, so 5 years, 10 years minimum. So we'll see in 5 years if those investments were still good, or if it was a good idea to do this, or if it wasn't.